Hello again, fellow BeachBum traders. Thank you for joining us for part one of our weekly trading game plan for the trading week of January 8th through January 12th, where we'll strive to help you see how to make money trading in January. We hope you had a great New Year's holiday with your family and friends, and now we're back to trading in 2024. So again, let's see how we can make money trading in January. So let's get started. Welcome, Brian Moritz. Thank you for joining us in the live chat today. Hope you're having a great new year already. So here's our Google document with our notes for part one of our weekly trading game plan for the week of January 8th through January 12th. We keep our notes for our weekly trading game plans in publicly accessible Google Drive or Google Documents. So you can refer back to these notes as well as our other notes. Our notes contain links to bonus videos, links to all the tools and resources we use to do our market analysis, our trade strategies, trade ideas, etc. So we keep our weekly trading game plan notes, Google Documents, all in a publicly accessible Google Drive folder, so you can refer back to the notes from this week as well as our notes for previous weeks. And again, you can find a direct link to that publicly accessible Google Drive folder also in the description box below. Welcome to Ricky Khan. Thank you also for joining us. Hope you're doing well. So firstly, we'll go to FinBiz and we'll see how the markets ended up on Friday. It was kind of an interesting week, and we'll talk about the week as a whole as we look at the indices and the futures, etc. But we can see on Friday, all the indices ended up just slightly positive. We can see and I'll talk about this again, they tried to rally tech a couple times. The trend for the week, as we talked last week, was profit taking in the Magnificent Seven, profit taking in big mega cap tech stocks, and they tried to rally it a little bit on Thursday, as we'll see in the indices, tried to rally it a couple times on Friday, and did eke out a little bit of positivity by the close on Friday. So all the indices ended up positive. I believe they were all down for the week, however. We can see we got more decline, well, about split, 48% advancers, 46% decliners, 52% new highs, 48 new lows, 77% are still above their 50-day moving average, 22% below, 65% still above their 200-day moving average, 34% below. And although it's showing a little bit bearish, again, we did get a slight positivity in all the indices. Earlier in the day, technology, again, they tried to rally technology a couple times, ended up, with just a couple green. NVIDIA was strong, Apple a little weak. Again, semiconductors were a little bit stronger than the broader tech. Saw some rotation out of healthcare, which earlier in the week there had been a rotation into healthcare and financials. And we'll again see that in our groups and sectors and industries. Some of the news. We'll talk about the employment numbers. 2023 everything rally is unwinding. Spot Bitcoin ETF could win approval next week. Holiday hangover grips stocks and the worst start since 2003. So they say last week was the worst start of the year since 2003. Rises after jobs report, closed slightly higher, but major indices end 9-week win streak. So again, this was broke the 9-week win streak, and we'll talk about how, and we mentioned previously, my hypothesis was that we got the Santa Claus rally early last year, and pretty much ended early this year. Welcome, Sydney Osborne. Thank you for joining us. Hope you're doing well. So we saw oil had bounced down a little bit, was headed down towards 70. Then we got some news. I believe it's Angola had some protests. They shut down some supply. And so we see oil is bouncing back up towards 75. Again, we'll see in the futures, 75 is kind of a resistance. 70's been support. So natural gas has surged back up. So it's bounced off 250 or so, headed back up to 3. We'll see if it breaks 3. Gold had made a run towards 2100. As you can see, it retraced a little bit, rallied, and looks like it's swinging back up. And we see the indices, the Dow's pointing slightly negative, S&P and NASDAQ slightly positive right now. The Treasury bonds, were oscillating around that 4% yield level, and they ended up above 4%. So again, they kind of oscillated around that 4% yield and ended up above 4%. So we might continue to see bond yields rise, bond prices fall. Again, strengthening of the dollar a little bit, so the foreign currencies fell a little bit against the dollar. DXY is sitting between, I believe, 102 and 103 right now. Welcome, Easy Mike, Flip of the Shippa. Thank you all for joining us. Hope you all are doing well. Okay, let's look at each of the indices a little bit. So we'll look at how the SPY did for the week. So again, we see pretty much the end of the year peaked out. Pretty much all this week was pretty much a downturn, and then on Friday they tried to rally it a little bit. As we'll see also in the futures is kind of a doji, and we're going to see this on all of the indices, so that it marks indecision. We can see it broke down below its 20-day moving average, so that will provide some resistance. Got plenty of room above the 50-day, so again, more risk than potential reward really right now. And we see that topping, that rollover at the end of last year, and now, pretty much a downward trend. Looks like, resistance at that previous top. Again, plenty of room above the long-term moving averages for a downward retracement. Got the Qs on the weekly, very similar, probably more of a downward retracement. Again, plenty of room above the previous high, above the moving averages. So again, significant risk to the downside. Looks pretty bearish. Dow, not quite so much. Again, it held up a little bit better. Tested the previous week's high, so the Dow's holding up much better. Got a lot of downside potential to the moving average, also to the previous high. IWM, and we see that pronounced rollover. Pretty much, downward trending, got plenty of room to the moving average. It broke down below the previous high, so again, next, support levels probably in the 190s or so. So again, plenty of downside risk on IWM. Look at the VIX. We didn't really get a whole lot of, the VIX swung back up a little bit, then into the 14s. The actual current VIX I saw is sitting 1330 or so. So really, even though we got that rollover and all the indices, not a lot of fear, not a lot of volatility, just a slight uptick up in the VIX. But again, nothing significant, still pretty depressed. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. So look at the sectors, the industries. So on Friday, again, we saw a rotation into financials, utilities, energy. Technology did, again, try to rally a little bit on Friday. Again, saw a rotation out of healthcare. Again, bond yields up over 4%. So that negatively impacts real estate. So real estate turned red. And again, the defensives got a little bit of rotation out on Friday, although for the week, the theme was healthcare, utilities, energy. And we talked about this. We kind of expected a sector rotation into the laggards from last year, utilities and energy. So we're seeing that rotation kind of play out. We expected a rotation out of technology and consumer cyclical communications. So again, we're seeing that sector rotation play out in the first week of the year. Real estate was surprisingly weak again, probably because bond yields are trending up past 4%. So again, for the month, we see healthcare, financials, basic materials, industrials, the weakest, again, technology, consumer cyclical. Got the industries, airlines were on top, so they rebounded. Got some basic materials, some energy, so coal, oil. Again, we saw oil bounce back up. It's in the 73s. I think it even ran up near 74 at some point. Financials, some of the banks, and we'll talk about what's upcoming with the financials and the banks. Some of the REITs did okay, and then some of the REITs didn't do as well. So residential, diversified, specialty, etc. didn't do as well. Big negative, solar. So again, as bond yields go up, interest rates go up, negatively impacts solar. Uranium retraced a little bit, although we'll see it was relatively, it rebounded somewhat this week. Gold and silver. Again, we saw a bounce on Friday in silver, and we'll see that in the futures as well. So for the week, energy, coal, oil, positive. Some of the negatives, retail. We saw retail turn negative, even though I did hear that they had record sales for 2023, also record auto sales. But again, that's in dollar terms, so inflation contributes to that positivity. So we see uranium was negative. So again, it bounced off that resistance, turned down. Gold pretty negative. Again, it is downtrending towards 2000, turned back up out of off that 2100 resistance level. So again, solar very negative. Silver again downtrending and did bounce off 23, and we'll see that. Okay, we'll look at some of the economic data from the past week. I'll open up the calendar and investing.com, talk about some of the highlights of the economic data from last week. Let me grab a drink, and then we'll see about the upcoming economic data for next week. Just a quick reminder that we have a Surf the Markets channel in our Discord, where as this economic data comes out, I try to post it, capture it from investing.com and or various Twitter sources, and post that in the Surf the Markets channel in our Discord. Our Discord is free to join. You can find a free invite in the description box below. You can also find that invite in the links section of our homepage, beachbumtrading.com. Again, our Discord's free to join, and you can find invites in the description box below, as well as, again, on our homepage. So from last week, again, the markets were closed on Monday for New Year's. Again, I hope you all had a great New Year's holiday, great New Year's 2024. Welcome, Douglas PC. Thank you for joining us. Hope you're doing well. Wednesday, again, was the last day of the historical Santa Claus rally. So typically the Santa Claus rally is the 5 days preceding the end of the year and the first 2 trading days of the new year. However, again, as we talked about for the past couple weeks, in my humble opinion, I think we got an early Santa Claus rally, started early, and I think it ended early. But again, that was the historical end of the Santa Claus rally. On Wednesday, the FOMC minutes came out, so I captured a few of the points that were posted from the FOMC minutes, which was, what I had expected, but it was a little bit of a shock to the market because they were pricing in these rate cuts. And as you can see from the minutes, the likelihood of a near-term rate cut is pretty low. So they viewed policy rates as likely at or near peak. So they're near or at their peak for raising. They said they made progress towards their 2% inflation goal. Judged that GDP would cool, labor market rebalancing continuing in 2024. Viewed risk to inflation and employment moving towards greater balance. Most participants expected restrictive policy stance to continue to soften spending, reduce inflation. And again, they talked about, that rate cuts anytime soon is unlikely. They even talked that there is, some potential for further rate hikes. So, they're at or near their peak, but again, they're not looking to cut anytime soon. So then on Thursday, got car sales were pretty good again for December. I guess 2023 was record car sales in terms of dollar amounts. Job cuts, challenger job cuts. And we're going to see this recurring theme that the employment market continues to be strong, resilient. So fewer job cuts than previous, fewer job cuts than last year. ADP non-farm employment was better than expected. So again, job market's more resilient than people were expecting. Continuing claims dropped below what was expected. So again, people are still finding jobs, and the initial claims was below expectations. So again, fewer layoffs, fewer people losing jobs. So again, job market continues to be resilient. The 4-week claim number also was dropping. So again, some people still finding jobs. The net was positive. So then Friday we got the non-farm payroll numbers, and the overall non-farm was significantly better than what was expected. Average hourly earnings better than expected. Participation rate dropped. U6 unemployment at 7.1, so it just went up a little bit, but the overall unemployment rate was stable and a little bit below expectations. So again, job market's actually very resilient. Fed doesn't have to worry about that. There is some indication, they might be worried about wage inflation based on this data. And so again, the likelihood of any kind of near-term rate cut, in my humble opinion, is very low. I hear the earliest people are really speculating there might start rate cuts is maybe June. I've heard, even later in the year. So again, the market was pricing in earlier rate cuts, and that was, again, in my humble opinion, delusional. Again, none of our content should be considered financial advice. We're not financial advisors. All of our content should be viewed as educational and for educational and entertainment purposes only. So again, we'll quickly look at the calendar from last week, see if there's anything else important. Welcome, Walter Lyons. Thank you for joining us. Hope you're doing well. Okay, so we got some manufacturing. PMI again, we're going to see this recurring theme that manufacturing's a little weaker than expected. So again, the economy's slowly slowing down. Again, manufacturing is weak. Employment's still okay. Bond auctions look like they went okay. Mortgage rates again had dropped because the bond yields were downtrending off 4%, but they did bounce back. So I expect the mortgage rates to bounce back some. Mortgage applications were way down, however. Got Fed officials talking, so again, you'll hear them, walking back the idea of rate cuts. Again, ISM manufacturing, employment was better than expected, but new orders weaker. Overall below 50 shows contraction, so again, manufacturing weakening. JOLTS job openings was less than expected, but better than the previous month. So again, still lots of open jobs. Crude oil stock dropped more than expected, and again, we did have a downtrend in oil, and then it rebounded, on that, I believe it was Angola news, etc. So we talked about car sales, non-farm employment, vehicle sales, again, better than expected. Natural gas storage down less than expected, and again, we saw a rebound in natural gas prices. Gasoline inventories up. Talked about non-farm payrolls, durable orders, pretty much in line. Factory orders better than expected, but ISM non-manufacturing PMI better than 50, so your non-manufacturing segment is still resilient. And we saw the oil rig count tick up, but the total rig count ticked down. So pretty stable, not a whole lot of supply addition or reduction this week. See what economic data we've got coming up for next week. Again, some bond auctions, some small business, import-export. Again, typical oil and natural gas inventories, mortgage rates. Thursday, we got core CPI, so that's going to be very important in terms of inflation. If that's different from expectations, that will, affect the market. So Thursday, core CPI. Also get jobless claims, so we'll get some volatility around that core CPI number, and then we get PPI on Friday. So Thursday, Friday, again, our CPI and PPI data, as well as jobless claim data. So I would expect our volatility to occur around those numbers. And again, if those are higher than expected, that's inflationary. And again, that would defer any interest rate cuts, and again, increase the potential risk of further interest rate hikes. So although I don't really expect further hikes, I think they'll hold versus hike. But again, that's my opinion. Also, we're going to be starting another earnings season. I wanted to point out in particular, some of the major banks are going to be starting earnings. I believe it's later in the week, towards Friday. But again, we're going to get some financials. We've got some biotechs early. We've got Albertsons, so grocery, some retail. Some technology, some defense. Home builders, KB Homes. So we'll hear how the home builders are holding up. And we start to get the banks. So there's Friday. So we got some major reports on Friday. Again, JP Morgan, Bank of America, Wells Fargo, BlackRock. You also got United Health. So major healthcare. Again, a lot of banks. So the banks tend to lead the earnings calendar. So again, on Friday, you want to watch financials, particularly the banks. And tomorrow we're going to again talk about that and how we are looking at potentially playing the financial sector. Okay. Also, some additional upcoming events for next week that I think are significant is the Consumer Electronics Show, CES. Again, in my humble opinion, I think we're going to hear some new tech developments. We're going to hear some hype around technology. I think that's going to give some exuberance to the technology sector. So as you hear companies reporting new technology, you might want to keep an eye on their sector, their industry. I think that's going to give some pop to the technology sector this week. Also, we've got the start of the JP Morgan Healthcare Conference, and So biotech, particularly biopharma, pharmaceuticals, biotechnology. Very often, these biotech companies will release their trial data, sometimes early readouts on their trials. Also, there's often mergers that occur at these healthcare conferences, and this is probably the biggest, if not one of the biggest, healthcare conferences. So again, the biotech sector, healthcare sector, you want to listen for that news, and I expect that to cause some exuberance in the biotech sector. So then we've got the next FOMC meetings at the end of the month, January 30 to 31st. Talked about earnings. So again, you can listen to how to play earnings via our video when earnings matter. Again, we're just getting started into the next earnings season. So financials. We saw UNH is hitting. So be aware of who's reporting in what sector, how they do. Again, in my humble opinion, I think the big banks we saw, J.P. Morgan, BlackRock, etc., will report, will beat, or at least report well. So again, I expect that to cause some tailwind for the financial sector when they report, and then we'll start talking about the other banks and the regional banks and some of the other financial sectors and some of the downside risk related to them. So now we'll go over to the market screen in Webull. Let me grab a drink and we'll look at the market screen in Webull. Okay, so just a quick reminder, if you're not already using Webull, they're still offering 75 free fractional shares. If you fund your account up to 25K, if it's less than 25K, you get 30 fractional shares, and each worth $3,000 to $3,000. As you see, we use Webull for our market analysis, our due diligence, the majority of our trading. So if you're not already using Webull, we would highly recommend it. And if you would use our affiliate link in the description box below, we would appreciate it, and you'll also help support our BeachBum trading community. So I'm on the market screen on Webull, on the online browser version. We can see advancer decliners histogram. So we got 3,000 decliners, 2,700 advancers, and pretty balanced in a very small percentage, 0 to 2. It was pretty balanced. Looks like a pretty balanced histogram. So again, kind of a tug of war on Friday, whether the market was going to go up or down. See the strong inflow into NYSE early in the day, not as significant of an outflow out of the NASDAQ during the day, but again, a net outflow increasing towards the end of the day, kind of the trend we've seen recently. But again, they did try to rebound technology some, so we see less of an outflow. Again, you can see the near-term earnings calendar, who's coming up in the very near term in this earnings, in the calendar section on Webull. You can also see dividends. I see some people talking about dividends, so you can see near-term dividend payments. Let's look at the best performing industries for the week. So again, coal, some energy, a little pharmaceuticals. So there were some merger talks, some healthcare, utilities. Again, we're seeing rotation into utilities, investments, oil and gas, insurance a little bit. Negative, industrial goods, banking, natural gas utilities were negative, biotech net negative, personal household products net negative. Look at the ETFs. So it looks like some mid caps. Looks like up on the NASDAQ, and they're trying to rebound the NASDAQ. So Qs, TQs, QMs, QLD, down on the VIX, up down on Bitcoin. So that was Friday. Down on short, down on the Russell, down on small caps. Okay, so let's look at some ETFs. Actually, I want to go to the futures. Let's go to the futures first. So we'll go to the futures in FinBiz. So we see that real pronounced, topping, rolling over, downtrending. Then we got kind of a doji on all of the indices. So got a level of indecision on all the indices. You can see kind of the NASDAQ's got that gap to fill. So again, risk, potential downside on the NASDAQ. S&P's got a gap, but it's got, some more room, downside room. Same thing with the Dow. So again, all the indices are showing rolling over, much, pronounced drop in the Russell. Again, the foreign markets similarly rolled over. Nikkei more resistant or resilient. DAX a little more resilient. Again, we saw the VIX swing up a little bit and then, retrace. So it's only at 14, not significant fear yet. Again, we saw oil bounce off 70. Now it's trending up 75. 75's a resistance level. So we'll see if it rejects again off 75 and tends to downtrend back down. Again, we see that uptrend in natural gas. Again, resistance around 3. So we'll see if it breaks 3 or rejects off of 3. If it breaks through 3, then, we got 325, 350. So right now, pretty strong uptrend in natural gas. Again, gold got rejected off 2100, kind of holding at 2050, another support level. You see it's got that kind of gap to fill. We'll see silver kind of filled that gap. So silver dropped down to 23, kind of filled that gap, found support at that level. Looks like it might be trending back up. I think there's a significant opportunity in that bounce in silver, again, between 23 and maybe 25. So we see it rejected off 25 last time. So again, I think there's a better risk reward profile in silver than there is in gold right now. Copper downtrending again. Palladium, significant downtrend. It had that exuberant run, so it looks like it's dropping back down. Probably tests that, previous support level at around 1,000. Corn's been downtrending. Wheat's kind of been consolidated. It's kind of oscillating, so it's holding kind of a new range. Sugar had dropped way off. It looks like it found a bottom. And again, we saw the bond prices all rolled over, trending down as the yields went back up over 4%. Again, dollar strengthened, so it bounced off the 100 level. Now it's sitting between 102 and 103. So again, dollar strength. So weakness in the euro. Pretty much all the foreign currencies, it looks like the British pound bounced a little bit. Okay, now we'll look at our ETF Google Sheet. So if anybody has a particular category to look at, you can throw those tickers up in the chat. If I missed your ticker previously, please let me know. I'll try to cover those. If you have a particular category, commodity, index, etc., to look at. So just a quick reminder, if you want access, 24/7 access to our ETFs Google Sheet, As you can see, we use this Google Sheet once we've identified a possible opportunity in a topic, a theme, a category, commodity, etc. Then we're going to jump over to our ETFs Google Sheet, see what kind of ETFs we can play, whether it be a long or a short idea. We use our ETF Google Sheet to identify ETFs that we can use to capitalize on those ideas. And you can, again, get access to that ETF Google Sheet as well as our dividend payers and our options puts ROIC Google Sheet by joining our Patreon at the all access or VIP levels. And you can find links to our Patreon in the description box below as well as here in the notes. So a couple additions that I've identified for this week that I want to take a quick look at each of these. And then we'll go from there. The first one is a healthcare ETF, a China healthcare ETF. So you play the healthcare sector for Chinese stocks. It's called KURE. So I want to quickly go look at KURE in our research tab. So again, we're not interested in really individual stocks in China. We've stayed away from those for several years. So we play several ETFs for China. So just a reminder, we have several already. Typically we trade yen long, yang short, but we also have CWEB, KWEB, etc. So you can see we have a number of China ETFs to play various categories in China. So I wanted to look at this KURE, KURE, as a way to play the healthcare sector in China. So here's this KURE, Crane Shares Healthcare Index. So we could see the risk reward profile. It's, from a 52-week standpoint, it's not all that exciting. 1.5 risk reward, near term 1.5, very long term, maybe 2.1. You can see the profile for what is that holding via the link in the ETF DB column. So we can see it's market cap weighted. Look at the holdings. So you can see what Chinese healthcare stocks does it own. So again, if you're interested, some number of these obviously aren't even traded in the US. So again, if you're interested, some of those Chinese healthcare stocks, you might be interested in using this KURE. You can see the FinViz profile via the link in the Google Sheet as well. You see, I identified it. I think it popped up because it's showing a multiple bottom. Looks like it did break down below that. Looks like it does pay maybe a special dividend. And again, it looks like it's kind of at a bottom, got some support, previous support down in that 16 level. So again, if you're interested in trading China healthcare, again, it's got upside into the mid 20s. So again, I just wanted to point that one out. We're going to leave it in the research tab. Again, it doesn't really meet our 2-to-1 risk to reward profile criteria, but it is, if we want to trade China healthcare, we could do that with this KURE. So I hope that also helps. Another couple we added is one on aluminum. So we've been looking for an ETF for a while on aluminum. So we heard about this ALUM and also lithium, ZSB, Sustainable Battery Metals Strategy Fund. And both of these were pointed out in a video on the ETF Guide channel. So thank you to the ETF Guide for pointing out and informing us about these aluminum and an additional battery metals ETF. So we'll look at those a second. So here's the aluminum ETF. So again, you can see the risk reward profile. These are relatively new. So you can look at the FinViz chart. So again, these are new ETFs. So here's ALUM. So again, looks like they just came out, in October of last year. So we don't really have a lot of history. That one's not optionable. It does pay, looks like it pays a small dividend. So again, we'll keep an eye on that as we go forward, watch its history. But again, if you're looking for an ETF to play aluminum, as we may at sometimes when we see those sector rotations in and out of aluminum, we can look at that one. Get an additional one on lithium. I put it in the lithium category. You'll see we have a couple others in lithium related to batteries. So this ZSB, again, is relatively new. Risk reward currently isn't all that exciting, but if we look at the chart, it's got a little bit more history, so it looks like it started in 2023. Again, lithium's been generally pretty beat up. The whole EV sector, downtrending, pretty beat up. Looks like it pays a pretty decent, maybe annual dividend, but again, been significantly downtrending. It's not optionable. And again, you can look at the particular constituents of that particular ETF, clicking on the link to the ETF DB profile. We see it's got a proprietary weighting scheme. Look at some of the holdings. So it's got treasury bills, futures, Albemarle's probably its largest, one of the largest, SGL. So SGL looks like its largest single company holding than Albemarle. We've got some foreign, Chilean, etc. So it does have some foreign companies as well, Nippon Carbon, etc. So it does give you those some of those foreign country exposures to these battery metals. So again, I hope that all helps. Again, we do have some other ETFs in the lithium category. So you can compare those to BATT, battery, Amplify Lithium and Battery Technology, and also LIT, Global X. So you can see their risk reward profiles are much more attractive right now. Even 52-week, they're more attractive, and top to bottom more attractive. So we'll keep an eye on that. CSB as it gets more history, and we'll see if its risk reward profile becomes more attractive. But for now, the ETFs that we would use to play lithium would be BATT or LIT. Again, those are both long, they're both up on lithium. Okay, I also want to look at the screener for the technology components. I thought that we saw some interesting behavior this week. I grab a quick drink and we'll look at the technology component screener. Again, you can find this screener as well as a number of other screeners in the screeners tab of our Google Sheet. Okay, you can see on our technologies components screener, we've got the long versions of a number of ETFs. Most of these are leveraged, so FANG U, SOXL. So this is the FANG stocks, semiconductors, biotechs, obviously ARK-K. We've got the TQs, so leverage 3x on the NASDAQ on the Qs, TECL, leverage 3x long on broad technology. And I thought this behavior was very interesting. We see pretty much all of these got rejected off their resistance line and dropped severely. We see some of them tried to bounce a little bit on Friday. Again, I think they tried to bounce them a little bit on Thursday, failed a couple attempts on Friday, and they did eke out a little bit of a bounce, but we can see the reaction. So ARK-K dropped, I think, more significantly than Fang Yu. Semiconductors again dropped significantly, much more significantly than the Fangs or the overall Qs. So, and then the broad technology also dropped off, and you can see it kind of bounced off that support level. So we can kind of see where they are relative to their moving averages as well. Although again, semiconductors bounced early. LabU, again, biotech's a little bit stronger, but we see that resistance level still got some downside risk. But again, we do have that healthcare conference, so we may see some bouncing back up, testing that resistance line. And we may see some continued attempts to retrace in the technology sector. But again, a lot of resistance, a lot of profit taking in those areas. And I think, in my humble opinion, again, I think the most vulnerable would be ARK-K. So if we do get an exuberant run in technology, for example, do something in CES, somebody comes out with some AI, they start hyping AI, and they pop technology again, I think the opportunity is to short, particularly if they get up to those previous tops. Any of these sectors that get up near their tops, I think there's an opportunity to short. And tomorrow we'll talk about how we're playing these opportunities to short those technology sectors. So again, I hope that all helps. Again, I thought it was very interesting, the slight differences in behavior in the components. Again, yesterday I was watching their popping SOX L, and I think the TQQQ, TECL popped a little bit, but ARK-K was still negative. So that was interesting. So in my humble opinion, again, it shows ARK-K is the weakest of those components. So again, biotech-wise, if you want to play along, LabU, short LabD, ARK-K long, SARK is the short that we'll use to short. Talks about the Bitcoin ETF. So there are some existing ETFs. They're not on the spot price. They're on Bitcoin futures, but again, you might see a little bit of a pop. Although, again, on Friday, we saw a downturn. A couple weeks ago, we identified this BITX, which is a 2X strategy. So if you're looking to, benefit from a pop on the approval of the spot Bitcoin, you might want to take BITX versus just BITO as the long. If they don't approve it, you want to short, BITI is really the only option other than directly shorting Bitcoin or some of the miners, etc. Brazil's still been pretty strong. Talked about China, yin and yang. We talked about that cure for healthcare. Talked about corn down, but it's still risk-reward profile's not that attractive. There's a couple others on cryptocurrency in general. We were long block. We took our profit in block not long ago. It's also BITQ. So again, kind of broader blockchain, broader crypto industry. So one I wanted to also look at particularly is DBE. So again, we're seeing that sector rotation into energy. So we've got a number of ETFs you can watch for energy. So there's the base energy sector, XLE. But again, I was kind of keeping an eye on this DBE. It's relatively close to support. Risk reward profile is not terribly exciting. So maybe, again, for a shorter term swing, that might be something to play for the overall energy sector. So we're going to keep an eye on that one. Again, we're seeing rotation into energy. I think that's a positive theme for this year. Financials, again, we talked about the banks, JP Morgan, et cetera, are going to start to report. Again, you can watch XLF. So we saw XLF was up a bit. The leverage long on financials is FAS. We're going to look at these in detail tomorrow because I think if we do get some exuberant runs in those financials based on those earnings, I think the opportunity is shorting them with FAZ. But again, if you want a day trade, short-term trade, FAS and FAZ on financials. Talked about gold. So GDXU long, GDXD short. Silver. We're going to talk about industrials tomorrow. Again, industrials had been making all-time highs. You can see XLI, it had recently, made a new all-time high, retraced off of that a bit. So we've been watching SIJ. If industrials, again, go up to that all-time high, we would be looking to short with SIJ. So you can see the risk-reward profile of that. Talked about the lithium. So again, the short for the Qs is SQQQ. So if the overall Qs go up to that resistance level, you can, again, hopefully some of our BeachBum traders, I caught the one on TECS. So we played the broad technology short with TECS, made some money. But you see, hopefully some of our other BeachBum traders caught some of the other shorts using SARC, SQQQ, FANG D. So the short on the FANG stocks is FANG D. So the long FANG U, short FANG D. Talked about natural gas uptrending. So we play Boyle long, cold short, where you can play UNG or UNL. Oil, we saw that rebound in oil. So if you will, again, short-term trading oil, we use Gush long, drip short. I'm looking to get, if oil does reject off 75, bounce down below 70 again, I want to get another position in USOI. We recently took profit and collected dividends on that. Talked about the retracement of real estate. So again, you could short-term long real estate with DRN, short with DRV. Again, the retracement of retail. I kind of expected that later in January when they start taking inventory, etc. It looks like they're taking profit in retail already. So you see all the retail ETFs are downtrending. Even the online retails are downtrending. So I might have missed that theme, but hopefully some of you caught that. So again, the short on semiconductors, SOXL, long, or short SOXS, long SOXL. So again, if we get a pop, an exuberant pop in semiconductors, we'll be looking to short with SOXS. Silver, if you want to play the bounce in silver, AGQ is the leverage long on silver. ZSL is the short. Got miners. Solar, we saw that, again, major negative in solar. There's the theory that once the Fed does start cutting rates, that'll be positive for solar. So we might be looking at raise or tan once they actually start cutting. But in the meantime, they try to rotate in and out of solar, frequently. Talked about the broad technology short, TECS, long TECL. So if they do rebound technology, again, we'd be looking for short with TECS. But again, you can short-term trade these. The broad technology, TECL was good on Friday. And then bonds, again, we saw bonds, TLT dropped. So if you want to play bonds short, you can use TBT. Long, you can use TMF. Then we have other bond periods. Talked about uranium. We talked about utilities. So utilities still kind of in the middle of its range, but again, sector rotation into utilities. Again, the VIX is pretty weak, and wheat popped up, and the yen's kind of, in the middle as well. So if anybody in the chat has any other ETFs that you want to look at, and if I missed yours, please throw it back up. We can leave this up, or we can check those again. In the meantime, quickly to go over our strategy for the week. Let me grab a drink and we'll talk about how to make money trading in January, our theme, our strategies, trade ideas for how to make money trading in January. So Ricky Khan says he big wins with SQQQ, SOXS. Congratulations on that. Tomorrow, remind me, we can talk about OARC, one of the yield max. I'm going to talk about at least some of the other yield max as well, and we can look at that in our dividend payers tomorrow. So let's talk about making money trading in January. First, let's go and let's see how January typically performs. So I have the link to this Investopedia article that we typically use. And we look at our average monthly chart. So we can see for January, typically January is up 1%. So historically, January is a good month. It's not, the best month. The best months are April, November, December. But again, January is generally an up month, 1%. And we get this drop off where February is only typically up 0.1%. So again, towards the end of January, typically we're going to expect, a less positive performance into February. So we want to position accordingly. But again, January is typically a positive month. Again, we had that first week of profit taking in the Magnificent Seven, etc. Rotation of money into healthcare, utilities, energy stocks. So I expect that to continue. We have a video on how the market typically performs, a short video. You can also listen to that. Also the best performing sectors and industries in January. So again, I expect, healthcare, energy, etc. They do talk about technology as well. But again, I think it's going to be technology outside of the Magnificent Seven. Again, profit taking there. You can also hear our videos about the January effect, which again is a rotation laggards to leaders, and we talked about that last week, how to identify the laggards, the worst performers of 2023, and expecting a rotation again out of the top performers from 2023 into the worst performers. And again, we kind of saw that this week, a lot of profit taking in the Magnificent Seven, and since they're so heavily weighted in the indices, that's going to drag the indices as a whole down. So again, something to consider if you're trading the indices. Also, continue to be aware of the wash sale rule. So if you took a tax loss harvesting on any losses from last year, make sure that you don't invalidate your tax losses by creating a wash sale. So again, you can listen to that in more detail via our video and the links to the notes, also on our BeachBum Trading channel. We've also been talking about how to make money trading in the winter. So overall, you can hear how the trends in the winter are. How does the stock market typically perform? What are the best performing sectors and industries for the winter? And then also last week, we had a general discussion about how to make more money trading in 2024. So you can now hear those strategies and trade ideas via the bonus link to that video in the notes. Also, 2024 is an election year, as you're probably well aware. So we have a previous video about the various years, how to make money trading, the various years in the election cycle, and what does that mean. So I would highly recommend you also listen to that video in terms of how to make money trading the election. Okay, we talked about sector rotations, looked at the technology components. Tomorrow, again, we'll look at our dividend payers Google Sheet. We'll also look at option strategies for, again, generating income in a couple of different ways while we wait for our top swing trading stocks to set up appropriately. If I missed your question or your comment of a stock you'd like to look at tomorrow, again, tomorrow we'll be using all of this data, all this input market analysis to select our top swing trading stocks to watch, stocks in our bullpen, etc. And again, if you have a particular stock you'd like us to discuss or a particular topic, you can put it in the comments to this video below. You can also contact us in the Discord. Just, again, tag us in the Discord. We're BeachBum Trading. No special characters, so there's an imposter I'll get rid of when we're done. No special characters, no numbers. So again, you could tag us in the Discord. And also, you can contact us via any of our social media sites, and you can find the links to our social media sites on our homepage in the links section. BeachBumTrading.com is our homepage. So again, plenty of ways you can contact us if you have a question, particular stock you'd like us to look at, or topic you'd like us to discuss. Also, if you have recommendations of how we can improve our weekly trading game plans or any of our content, any of our trading tools, our community, etc., please let us know what we can do to help add more value for all of our BeachBum traders. So we greatly appreciate you watching, and for everyone that participated in the live chat. And again, we hope you're off to a great start in 2024, and we hope that this will all help you make money trading in January as well as throughout 2024. And we hope you'll come back same time tomorrow, 10 a.m. Eastern, for part 2 of our weekly trading game plan, where we'll take all this input data, select our top swing trading stocks to watch, stocks in our bullpen, building out our shopping list, as well as additional income strategies related to dividend payers and options. So hope to see you all again tomorrow. Thank you for watching, and have a great day.